Welcome back, everybody. You got Will and I Man here from the Block Runner, MetaZone, Rovi, and MScribe, and today we're going to be talking about Bitcoin finance.
That's right. Really, it's just the Bitcoin. Maybe now the time is hot, right?
It's like, don't go to sleep, guys. It's
Yeah.
Bitcoin finance. This is boomer crypto technology.
Is it?
Or
no, dude. This is
it's
like,
brand new.
This is fundamental shit that we've been like desperately needing forever. Like the Bitcoin ecosystem has been lacking the proper rails for like anything to be viable.
So
right?
1000x potential.
I think so. Yeah.
Sure.
Why did we spend 2 years talking about the Bitcoin ecosystem if not for 1000x potential?
Yeah, let's make the pixel bigger.
Yeah, literally the unseeable pixel, right? I wish we had that on screen, but just imagine it, right? You got a circle that's valued at 2 trillion.
Yes.
It's called Bitcoin.
Yeah.
That's the value of this thing. And it's a chain that has the capability to be utilized, right? And see this happen across the landscape of crypto and all chains. So there's typically a native token with its value, and then its chain ecosystem value. And they somewhat parallel, at least to the point where the ecosystem value is visible.
Yeah, it's like a percentage of the overall asset value.
Like Ethereum, it's like 1-to-1 just about, right?
Yeah.
Ethereum's 200, 300 billion, whatever. The ecosystem, meaning like the combinatory value of like ERC20, 721s, all that shit, around the same realm.
Yeah.
Right? Same thing can be said around like Solana and whatever, right?
But on Bitcoin,
yeah,
there's a stark difference.
Yeah, we're talking 2 trillion, the biggest bubble.
It's not even 1% of that.
Yeah, it's a non-visible comparison, right? Which the thesis is, what the hell? You know, if you could build an ecosystem connected to Bitcoin, which has been proven can be done through ordinals and such, you know, how do we optimize the build environment to a point where now we can like have that visible comparable value over time, right? So here we are. We spent 2 years like building prototypes called metaprotocols of like how do we build like some base level technical infrastructure to start doing things on Bitcoin.
Yeah, L1 rule sets.
Yeah, essentially they're just things you could put on Bitcoin that describe rule sets, like you said, and then indexers off chain can interpret this stuff to produce like new value. Right?
That's right.
We ran that experiment. It's pretty cool. Did well. Did not so well.
Yeah.
But now it's like a new wave of like iteration is approaching.
Yeah, and it's spawned through investments.
Well, that helps. What do you mean? What kind of investments? Like,
Just VC investments.
Yeah, that helps, right? It's like, even though the space tends to not like VCs and like, you know, institutional capital.
Yeah.
I mean, these things
kind of need that for development.
Yeah, like highly technical development that's not like completely riddled with like flaws and
I mean, either you're a project that raises VC funds or you're a project that sells NFTs or whatever to raise funds to build whatever it is that you want to do.
Yeah.
So there's risks on all sides, but let's see what's going on in the ecosystem. So right now we have Arch Network. We're excited to share that Pantera Capital is leading our 13 million Series A to help Arch build the permissionless financial rails for Bitcoin. All right, so this is a big deal. I think in the early days of Ordinals, there's very few investments in the Bitcoin ecosystem, and now we're starting to see institutional adoption come in with like ETFs and Bitcoin becoming the reserve currency or a strategic reserve, let's say that way. And now all of a sudden we have VC investments coming in to support the ecosystem. All right, and next, so here's the website. You want to go into their documentation to kind of read through what they do. But this is another take on bringing DeFi to Bitcoin.
Yeah, or just like a
programmability,
just an infrastructure grounds, right? So it's kind of similar in a sense to like, you know, there's so many L2s to Ethereum, right?
Yeah, there's a lot.
Right?
We went to a conference where it felt like 90% of everything was L2s on Ethereum.
Pretty much, yeah. And I think Bitcoin has already experienced that, but now like, you know, the core starting meta protocols are starting to like morph into their own L1s and L2s themselves.
Yeah.
Right. And then some new ones are coming into the space. So this is kind of a big deal, right? It's a big inflection point, I think. who knows if any of these are going to actually stick? Because we know how difficult and competitive like L2s are in the context of Ethereum, right? They're constantly fighting for user adoption, developer growth, all that stuff. So similar expectations here, right?
Yeah. And speaking of morphing, Trac Network, HyperMall is going to be releasing the 15th of May. So another 25 days or so.
Is that how long that is?
Yeah.
Yeah, today's like the 24th. So
yeah. Yeah, and so HyperMall is interesting because Trac, they've been building on Bitcoin for the 2 years with the Trac Network and Tap protocol. So we've been building DMT on Tap protocol, one of the more interesting meta protocols on Bitcoin and all of crypto, supporting the Bitcoin ecosystem, and now the NAT token, the first token of the DMT ecosystem being directed to the miners, all supported by the Tap. And now they're releasing HyperMall, which is its own kind of ecosystem of environments where you can have fast transactions and also connect that to Bitcoin.
Yeah, I guess the bigger underlying showcase here is the Trac Network itself as its own L1, right? So it kind of is described on their website.
Yeah, so well, here's kind of a breakdown from Benny himself. So the Trac L1 network enables app builders to create any connection with any technology, including Bitcoin. And as Trac also provides decentralized indexing and oracles, there's no need to pay third-party providers such as Chainlink to inject something into your smart contracts. It's pretty cool.
Yeah, so we have plans to utilize this ourselves, right?
Yeah, 100%. Yeah, so the focus right now is to really improve the experiences of, just using Bitcoin altogether.
And Bitcoin native assets.
Correct.
Because, so the metaprotocol era proved you can generate these things through these on-chain, essentially instructional rule sets of how you generate these, whether it's an arbitrary or non-arbitrary asset, whatever.
Mm-hmm.
You could do these things through, protocols like metaprotocols like Ordinals or Tap or runes, whatever. Yeah. Right. But ultimately, these things hit roadblocks because of the basically non-usability, non-viability, like the infrastructure rails around it. It's Bitcoin at the end of the day.
Yeah.
Which is the most or the least user-friendly, user experience journey when it comes to any chain in existence.
Yeah,
right?
When you submit a transaction on Bitcoin, you could wait as long as 10 minutes to an hour just for one transaction.
Before. Yeah. So we built apps on native to Bitcoin that launch these types of products, and literally part of the app experience is
waiting for the block.
We're gonna set a block for the genesis of a launch.
Yeah.
And it's a non-arbitrary expectation, right? We don't know when the block is going to get mined. So imagine that user experience if you haven't interfaced with the Bitcoin L1 app. It's there's an expected launch date, but it's here, but it just happens to be an hour and a half block.
Yeah.
So I missed the mint because, I only have an hour for lunch.
Yeah, and it goes both ways too, right? It could take a long time, but also 4 blocks can go within a minute.
Correct. Yeah. So it's not the most optimal user experience. For a crypto degen, it's acceptable.
Yeah.
But for
institutional finance,
not acceptable.
Yeah.
For average everyday crypto users, not acceptable.
Nope.
Right. So we've got to kind of move our parameters a bit.
Yeah. So Trac Network, in about 20 days or so, releasing the Trac Network blockless L1 network headless crypto. So this is a DAG. So a DAG is pretty interesting because it's not a blockchain. It's kind of like a thread that kind of bridges, brings all these transactions together in a completely fast way. So you're leveraging kind of these different nodes of the network to process these transactions significantly faster than a singular blockchain. But so that's Trac, and also in the ecosystem for Bitcoin is OPNet. So testnet contract ready, deployment date is unknown, and then 200 likes to reveal the date, and that was posted yesterday.
It's definitely more than 200 likes. So
yeah,
testnet should be coming.
This was posted today, actually.
Yeah. So another meta protocol now traversing into its own network, right? We're starting to see these things all kind of deploy at the same time. So we spent a year waiting for these to be built out, and they're finally coming, right?
Yeah, so this is their website. They have their own ecosystem as well. A bunch of apps building as MotoSwap, well known. Op Fun.
OP Fun.
Yeah.
Yeah, so expect that, right? A lot of these new ecosystems, they're going to have primitives, right? So their own dexes.
Yeah.
I guess Pump.Fun has become a primitive.
Yeah.
Yeah, I guess so.
They've solved the problem. They did.
Yeah, it's the most successful product or market fit, at least so far over the last year or two.
Yeah.
So if you're launching a new ecosystem, a new environment for users, then just port over that experience. Demonstrate your network's capacity, right?
Yeah. Build a community through launching a token.
Yeah.
Another one, Alkanes. So we did a video a few days ago on Alkanes. So if you want to go deeper into what that is, I would definitely watch that video. But we're going to put all the links in the description, so this one also will be there. And Alkanes implements a full smart contract environment on Bitcoin L1. So smart contracts are developed in Rust, compiled in WebAssembly, and then they're compressed and put onto Bitcoin itself.
Yeah.
And so they're essentially an indexer that runs these smart contracts when executed. So pretty interesting. But let's move on here. Alkanes is a new metaprotocol by Oil Wallet that brings programmability directly onto Bitcoin. Oil Wallet raised a seed round in March 2024, so that's about a year ago. $3 million was raised. Has notable investors. Udi's one of them.
Oh,
and
really?
Shout out to Masari Crypto for fundraising data. Yeah. Okay.
Oh, isn't there like something at the top here that that's not the tweet that we were supposed to put in here, but it's weird. I was expecting a tweet that was more like centered around an incoming DEX in relation to Alcane. So.
Oh, really? Okay.
Yeah, I don't know how that made it on there.
Okay.
But nonetheless, Alkanes, dude. I mean, what do you expect? It's another programmable meta protocol. So what's a good showcase of that? A DEX.
Yeah.
Swappability of tokens.
Yeah, and there's a good summary on what's happening on Bitcoin. It says here, since 2021, Layer 2 projects building on Bitcoin have increased over sevenfold from 10 to 75. So more than 36% of all venture funding in Bitcoin L2s was allocated in 2024. Since 2018, crypto firms have invested a total of $447 million in Bitcoin L2 projects.
Yeah, we were there.
Yeah.
We made this prediction, right? Because there were some moments during the early iterations of this meta protocol era where, things worked out so well that they broke Bitcoin for a while, right? Like BRC20s got so hot that for about a week or two, Bitcoin was essentially unusable, right? The fees exploded and, there was quite the clogging in the mempool.
Yeah.
So just like, successful products launched in Ethereum back in 2018, 2019 days, like CryptoKitties.
CryptoKitties clogged that network.
Early DeFi, like food tokens and stuff. It became pretty painfully clear and obvious, like we need to scale in the L2 direction. We just talked about that.
That's right.
But so there's like a interpretation now, like because of the forced direction of that, it's kind of like introduced like a little bit of a parasitic situation in context of Ethereum where you have all these L2s siphoning all the value of the network away from Ethereum. What are you left with?
Yeah.
As the Ethereum L1, not much, right?
That's right. Yeah. It hasn't performed really well over this cycle.
Yeah. So now there's like a little bit of a, what's the word?
It's like going back to roots.
Yeah, reversion back to the fundamentals of like supporting the L1 roadmap, right? So Bitcoin doesn't have really an L1 roadmap. It's not really like the core of Bitcoin has no intention to become programmable, has no intention to become more scalable, really. It is what it is.
Yeah, because if you do that, you're sort of trading off security.
Yeah, which you cannot compromise.
You can't do that.
Yeah, so don't expect like some sort of, after the clear vampiricism of L2s as they continue to like dominate, some sort of like shift to like, you know what, we don't need L2s, we need new opcodes, we need bigger blocks, we need faster block time. Like, I doubt that's
that's not going to happen.
Yeah.
Yeah, so if you needed a metric to kind of track the value proposition of Bitcoin DeFi, it's TVL. And so this report estimates that over $47 billion of Bitcoin could be bridged into Bitcoin L2s by 2030. And so bridging is probably going to be the more dominant form of how you interact with these L2s because there's not you can't really program a lot of this stuff specifically for DeFi directly on Bitcoin, unless you're leveraging kind of like a side chain aspect.
Yeah, and like down, if you scroll down, there's like some ecosystem like imagery here, just to really paint the picture of like how expansive this can get, right? I mean, it all started with stacks. These are like the early iterations, Lightning Network and such.
Mm-hmm.
But yeah, since 2024, if you scroll down some more, it's like it's exploded quite a bit, right?
Yeah, so Bitcoin L2 ecosystems, we've got rollups, side chains, rollups on Ethereum or side chains, infrastructure, state channels, eCash, virtual UTXO and CSV, and what does that say? Validia chains?
Mm-hmm.
Okay, interesting. All right, so this is definitely a good read if you want a kind of like a background understanding of what's happening within the Bitcoin ecosystem. Let's move on here. So, in other news, Clonex, they made $81 million from NFT sales. They got another $37 million in royalties. They have an airdrop sneaker for coupons. They go silent, they shut down, and they don't pay servers, and then holders are left with basically NFTs that read. The content has been restricted using Cloudflare's basic service, and the manner is in violation of the terms of service. So basically, they stop paying the bills on Cloudflare, and all of a sudden, the NFTs are gone.
Yeah, if you were not around during like the beginnings of Ordinals, this was like the main selling point, right? Mm-hmm. It's like over here in the Ordinals ecosystem, all this stuff is truly on chain, not on some like off chain storage provider, right?
Yeah. So that's what Casey's saying here. Is I've been banging on this for quite some time. Not happy to see people get wrecked, but it's good learning moment. So Casey's the one who created Ordinals.
Yeah. So, I mean, Clonex was massive. It was a huge community, a lot of value, obviously, associated to Nike, probably one of the biggest brand companies on earth.
Yep.
And yeah, so maybe this is one of those catalysts, right, where people start to see the value prop again for Ordinals,
Yeah, for sure.
Using Bitcoin, the usability of Bitcoin as that storage layer for things like art, and other stuff, right?
Yeah. So this is the Bitcoin ecosystem here, and we're looking at all the NFTs, the top NFTs,
which are down. No, not NFTs, dude. These are Ordinals.
Ordinals, correct.
Remember, NFTs are bad.
Yeah,
in the context of Bitcoin.
Correct. Yeah, these are the NFTs on Bitcoin called Ordinals.
Yeah.
And they're also down just like everything else, so that doesn't really mean anything, but
they're down pretty bad. Like from like if you were to like actually look at the chart, like do the max, there was like a pretty huge euphoric local top, I would say like a year and a half ago.
Sure. Yeah.
Maybe like a year ago. So I mean, everything's down to like 95%. So,
but these are Ordinals, dude.
Yeah, these are
they're
OG
on
Ordinals.
Bitcoin forever.
Right. Yeah. These are the like OG class of Ordinals, I would say. Well, most of them, not all of them. Right?
Yeah.
Some of these are pretty recent, but typically the ones that are in the top 10 to top 20. These will probably be classified as like the OG Ordinals, right?
Yeah, absolutely. All right, moving on. We got Munib. This is, what do we think about Bitcoin finance? To me, it means DeFi for Bitcoin. I've seen some institutions already using this term. So, yeah, I think he's definitely aware about what's going on and all the investments in the Bitcoin ecosystem. So
it seems to be getting more of a push these days than I'm noticing it, right? Charles Hoskinson's out there saying, Ethereum's eventually going to die out.
Yep.
Because everything is going to come back to Bitcoin because of BTCFi.
But not Cardano, though, right?
Well, Cardano's now.
Oh, that's right.
They're now like Bitcoin. A BTCFi provisioner sidechain. So it's like that's becoming like the narrative, right?
Yeah.
All these other chains, what you need to be doing is supporting BTCFi, or else you're going to literally die.
Yeah.
Which I don't know. What do you think about that?
Well. Yeah, I really don't know. I think what the most important thing that if you're going to be doing anything Bitcoin finance, you really need to send value back to the main chain, right? And not siphon value from the main chain. Why? Because we've seen what happened with Ethereum. And the second thing is the sustainability of the Bitcoin network, right? If you're not helping to sustain that network, the subsidies dwindle every 4 years, right? It halves every 4 years. And And so it takes a hit on the miners, and they still have to secure the network with the same energy, right, requirements, right? Otherwise, the hash power goes down, security goes down, and then you don't have a store of value anymore. So
yeah, that whole origin thesis kind of loses its steam.
Yeah, so a lot of these protocols need to think about that.
I totally agree. That's you don't want to repeat the problems that Ethereum is facing, right? Where, it's nice to be able to package all these like tertiary activities into these rolled up, provable transactions back to the main chain for finality or whatever, final validity.
Yeah.
But like ultimately, it's not producing enough value to like maintain the security around that mother chain.
Yeah, that's right.
You can't really do that because Bitcoin faces its own like internal subsidy crisis already. So like one of the big talking points of why we want to build an ecosystem around Bitcoin or on top of it is to contribute on that end. So
yeah, 100%.
I agree. I feel like that's an ethos that needs to be kind of like talked about more and identified. Like if all these guys are just replicating the parasitic nature of like L2s on ETH.
Yeah, send me your Bitcoin and then we will make magic. Like that's not good enough.
And we'll send you like pennies back to Bitcoin miners in return.
Correct.
And like wave the flag of like, see, we're Bitcoin aligned.
Correct.
We are Bitcoin and you're really not.
Yeah, that's right.
So we'll see, Nonetheless, some early signs of traction, right?
Yeah, so who's going to be the Lido of Bitcoin? So Lido, if you know what it is, it was a major protocol on Ethereum that did DeFi, right? And so we have Solve Protocol. That's one of them. We have Lombard Finance, Function BTC, the T Network, and then, of course, Stacks, Rootstock, and Pump BTC.
Yeah, and collectively, somewhere around the realm of 5 to 6 billion in TVL across all these different staking derivatives.
That's a lot.
That is a lot.
Well, if you go to Dex Screener and you kind of compare TVLs, that's right up there.
Yeah, and it's really kind of like invisible at the moment.
Yeah, you won't find it on Dex Screener, but if you do,
Yeah, so this is very nascent, very new. I think a lot of people aren't aware like these things are happening on Bitcoin, right? And it's getting a lot of institutional attention, probably because like the macro situation and like that Bitcoin is a part of this cycle. So I think once these people catch wind that, there's some financial primitives starting to kind of erect to support even more like, value generation opportunities for Bitcoin investors. It's a pretty solid theory, right? Or thesis, right?
Yeah, I totally agree.
Can get a lot of people pretty excited. So we'll see. We've been waiting for like a year now for like the infrastructure era to be over in the context of Bitcoin. And, from our perspective, it's always going to boil down to like the apps really, at least as far as like, what's the more interesting stuff?
Yeah. 100%.
I mean, DeFi is important, but I mean, from my point of view, it's kind of boring, kind of stale. I don't know.
Yeah, I agree. I agree. I want to see what the devs decide to do, which network they decide to build on and what do they build.
Yeah, and then what community will form around that. Because, from my optics point of view, that's like the main component to like Web3 success stories.
Yeah, viability.
And community, right? Can you achieve something of product market fit that attracts real users, not smoke and mirror users, right? Because they exist. They're out there, trust me.
There's a great majority of them out there.
Yeah. Just like quick little hot tip for you noobs out there. Don't trust every social media engagement metric out there.
Correct.
Don't think 500,000 followers on a Twitter account is authentic. In a lot of cases,
it's not.
Maybe 1% of that is like real human beings.
Maybe, yeah.
Yeah.
All right, guys, that's it for us. If we missed anything for Bitcoin finance that we didn't talk about today, please put it in the comment section below. If you want us to talk about anything specific in the crypto ecosystem, also put it in there. And we like to comment on all the comments that happen on the YouTube channel. That's it for us. Appreciate you for watching, and we'll catch you in the next video.
Peace.